In this video, I will show you the best crypto trading strategy on my channel. I will show you what indicators to use and what settings to modify. Then I will teach you when to enter long position and when to enter short position as well. I will show you where to put take profits and stop losses, and lastly, I will backtest this strategy 100 times and show you realistic results. So stay tuned and let's trade. Alright, so we are currently looking at a 1-minute chart of Bitcoin. Now let's add our 2 indicators we will be using for this crypto scalping strategy. Open your Indicators tab and search for Signal Table. We will be using this community script by only Fibonacci, so left-click this indicator once. Now, let's add our second indicator, which is called Swing Arm ATR Trend Indicator. We will be using this one, so left-click it once, and we are finished with adding indicators to our chart. Now, in order for our strategy to work to its full potential, we need to change a few settings for our indicators. So, let's start by modifying our Signal Table indicator. This indicator adds these 2 EMA lines, as well as this signal table. So, double-click either one of these lines, or this signal table, and you will open settings for this indicator. For this indicator, we only need to disable one setting, which is this table setting, which is located in Style. Once you disable this setting, press OK, and we are finished with modifying our first indicator. Alright, let's move on to our second indicator. Our Swing Arm ATR Trend Indicator adds these bullish and bearish shadows, as well as these yellow and pink signals. To open this indicator's settings, double-click either one of these signals, or any shadow border on your chart. Let's start with modifying our Style tab first. In here, we need to disable quite a few settings. First of all, we want to disable these first 2 settings, so Trailing Stop and Extremum. Next, we want to disable these 4 Fibonacci settings, which are all gray colored. And lastly, we want to disable these next 6 settings as well. These 6 settings add those yellow and pink signals to our chart, but we don't need them for our strategy, so it's better to disable them to avoid confusion. If you're done with disabling these settings, open your Inputs tab. In here, we only want to change this ATR factor setting. So, change this settings value from 5 to 6. Great, now press OK, and we are done with modifying our indicators, as well as our indicator setup. Now that our setup is complete, let me show you how to trade using this crypto trading strategy, starting off with long position. If you want to make money using this trading strategy, you need to follow a few steps in order, and you will make successful trades all the time. So, in order to simplify these steps, I created this very simple 3-rule strategy that we will use as our trading blueprint. This strategy will tell us exactly when we can enter a long trade. So, let me explain what 3 rules we will follow. Rule number 1, cross signal. Like I mentioned previously, our first indicator adds these red and green EMA lines. When entering a long trade, we will always wait for green EMA line to cross the red EMA line upwards, like here. When this happens, we receive a bullish signal that the market is in an uptrend, and the price will rise. Rule number 2, green shadow area. This shadow area is created by our Swing Arm Trend Indicator, which also added those yellow and pink signals, but we disabled them while modifying our indicator settings. Green shadow area is our second bullish signal, so when this happens, we get another confirmation that the market is in a bullish trend. As you can see, both of our conditions are met, so let's check our third and final rule. Rule number 3, bullish candle. Since this is a 1-minute chart, we don't need the first candle to be bullish, because the crypto market fluctuates a lot in a short term. So, we will check the first 5 candles right next to our cross signal, because we need this third bullish signal to be confirmed in the first 5 minutes of this cross signal. If just one candle is bullish, we know that the market is in an uptrend, and we can confidently enter a long trade. Great, now that we have all 3 rules set, let's see how this strategy works on a real-time example. So, let's try this strategy in action. All we need to do is follow our 3-rule strategy, and we will always enter a long position correctly. Let's check if all 3 of our conditions are met. Alright, so rule number 1, cross signal. Here you can clearly see that our green EMA line crosses the red EMA line upwards, which is our first bullish signal. Our second rule is that the area below this cross signal must be green colored. This second condition is also met, so let's check our third and final condition, which is that the candle next to our cross signal is bullish. As you can see, the candle right on top of cross signal is bullish, but when it's not, we can also check these next 4 candles next to it, and if just one of these is green, then we have a third confirmation that we are in an uptrend. All 3 conditions are met, and we can confidently enter a long trade. Our stop loss will be placed at recent swing low, and our risk to reward ratio will be set to 1.5. Now that everything is set, let's see how this plays out. Our prediction was correct, and we made a profitable trade. If you still fail to understand how to trade long with this strategy, I highly recommend rewatching this part of the video, because right now I will explain how to enter a short position and what rules we will use for our short strategy. If you are paying close attention to our long trades, you will be happy to know that for our short trades we will use identical rules, but reversed. So, what do I mean by this? Let me explain. Let's start with the rule number 1, which is that we must wait for cross signal. For our long position, we waited for green EMA line to cross red EMA line upwards, but in short trade, we will wait for the exact opposite, so for the red EMA line to cross the green EMA line upwards. So, that's the rule number 1, let's move to our second rule. Our rule number 2 is that the shadow area must be red colored. Once again, this is the exact opposite as in our long position strategy, where our shadow area had to be colored green. When the area is red, we are essentially receiving a bearish signal that there are more people selling than buying in this market, meaning that the price will eventually go down. Our third and final rule for our short position strategy is that our candle must be bearish, so it must be red colored. In case of long trade, we could also check next 4 candles next to our cross signal, which also applies in this strategy. If the closest candle to our cross signal is not bearish, we can wait another 4 minutes for a red candle, and in this time frame, we can enter a short trade as well. With all 3 rules for our short trade set as well, I think it's time to test this strategy on a real-time example. Just like with long trades, we also need to follow our 3-rule strategy while entering our short trades. So, let's quickly recap what rules we're using for our short position. Rule number 1, wait for cross signal. In case of a short trade, we need our red EMA line to cross our green EMA line upwards, just like this. This condition is met, and so is our second one, which says that the shadow area must be red colored. Now, for our third and final rule, we need to check if any candle on chart in a 5-minute time frame after our cross signal is bearish. This very first one is, so all 3 of our conditions are met, meaning that we can enter a short position. Our stop loss will be set to recent swing high, and our take profit will be set to 1.5 risk to reward ratio. Now that everything is set, let's see if we made yet another profitable trade. Our prediction was once again correct, and we made another profitable trade. Now, I will backtest this strategy 100 times, and then I will show you what results you can expect by applying this crypto trading strategy on long trades, as well as on short trades. The importance of backtesting is something I cannot emphasize enough, and I believe every trader should do it, because this is something that will put you into 1% of traders. You can record all the data by using Google Spreadsheet, or you can use a better route and use Trader Edge instead. Trader Edge is literally the best backtester on the internet. Thousands of traders around the world are using Trader Edge to get an edge on their competition. Trader Edge is 3 times faster than a traditional backtesting method. All you need to do is set your initial account size and a profit and loss per trade. Trader Edge will give you all the info you need about this strategy, such as the win ratio, the profit and loss, the maximum drawdown, and much more. Once you're finished with backtesting, you can save the results to the strategy library. Besides that quick and easy backtester, they've also got some other useful features on their website, such as the position calculator, which can be very handy for those who trade forex and commodities, the profit and loss calendar, where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem, you will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they'll also include 4 pre-made high-quality strategies that have $100 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is absolutely no risk at all. So go ahead and check it out. I will leave a link in the description below. Now, let's see what results you can expect by trading with this strategy. After 100 trades, I can finally show you realistic results you can achieve using this strategy. Out of all 100 trades, this trading strategy was profitable 69 times, meaning we got a 69% win rate strategy. With our initial account size set to $1,000, we grew our account by 310%, which is about $3,109. Our profit factor is 3.34, and Trader Edge gives our strategy score of 96 out of 100, meaning that this crypto trading strategy works marvelously. Now, let's end this video by comparing this strategy with our other trading strategies. This is our first crypto trading strategy on our list of profitable trading strategies, and we will compare this strategy with our future crypto trading strategies. As I upload more videos, this spreadsheet will grow, and we will find the best scalping trading strategy there is. So if you want to be a part of this journey, make sure to subscribe, and if you are interested in any other trading strategies, like this 15-minute Holy Grail indicator trading strategy, then click on the video that just popped up on your screen.